Most investors today are using AI completely wrong when it comes to stock analysis. They open an AI tool, type something like, "Is Apple a good stock?" or "Will Nvidia go up next year?" They get a long answer that sounds confident, maybe even convincing, and then they either blindly trust it or completely dismiss AI as useless. The truth is, AI isn't bad at stock analysis. What's bad is how most people are prompting AI. AI is not designed to predict stock prices or tell you what to buy next. What it is very good at is helping you analyze businesses, surface risks, and structure your thinking if you use it correctly. In this video, I'm going to show you exactly how to use AI to analyze and pick long-term stocks the right way using a simple 5-rule framework. This is built specifically for long-term investors, not traders, not speculators, and not people chasing the next hot stock. And at the end of the video, I'll show you a ready-made system that puts all of this into action. The biggest mistake investors make is asking AI vague, unfocused questions. When you ask vague questions, you get vague answers. And vague answers are useless for real investment decisions. People also try to do too much in one prompt. They ask AI to analyze the business, growth, valuation, risks, and future outlook all at once. That's not how professional investors think, and it's not how AI works best either. To fix this, you need structure, and that structure starts with the first rule. The first rule is defining the role. Whenever you use AI for investing, you should always tell it who it is supposed to act as. If you don't, AI defaults to generic explainer mode. There is a massive difference between asking, "Analyze Microsoft stock," and saying, "Act as a long-term equity analyst." That one sentence changes the depth of reasoning, the tone, and the assumptions AI makes. As a long-term investor, you want AI to think like a fundamental analyst, someone who cares about business quality, durability, and long-term economics, not hype or short-term price movements. The role sets the mindset. Without it, everything else is weak. Once the role is clear, the second rule comes into play. Context. Context tells AI what kind of investor you are and what actually matters to you. For example, if you're analyzing a company for a 3 to 5 year horizon, AI needs to know that. It needs to know you're focused on long-term fundamentals and not quarterly earnings noise. When you provide context like, "I'm analyzing a company for a 3 to 5 year investment horizon, and I'm a long-term, fundamentals-focused investor," AI stops thinking like a commentator and starts thinking like an analyst. This is critical when you're analyzing companies like Amazon, Meta, or Visa. Without context, AI might focus on recent stock performance or news headlines. With context, it focuses on competitive position, cash generation, and long-term risks. Role defines who the AI is. Context defines the situation. The third rule is the most misunderstood. One clear task per prompt. Most investors try to overload AI with multiple tasks at once. They ask AI to analyze the business, growth, risks, valuation, and future potential in a single prompt. That almost always leads to shallow answers. Professional investors don't think that way. They break analysis into focused steps. Instead of asking everything at once, you ask AI to do one specific job. For example, analyze revenue growth quality, or analyze cash flow durability, or analyze competitive advantages. Each prompt should have one clear objective. This forces AI to go deeper and produce decision-relevant insights instead of surface-level commentary. Clear tasks turn AI into a research assistant instead of a storyteller. Now comes the fourth rule, and this is where quality really improves. Constraints. Constraints tell AI what to ignore. This is incredibly important for stock analysis because markets are full of noise. When you explicitly tell AI to ignore short-term stock price movements, speculative forecasts, and hype narratives, you immediately improve the quality of the output. Constraints don't make AI less intelligent. They remove distractions. For example, when analyzing a company like Nvidia, constraints prevent AI from turning into an AI hype cheerleader. Instead, it focuses on margin sustainability, competitive pressure, and long-term demand durability. Constraints keep the analysis grounded in reality. The fifth and final rule is output format. This is the most overlooked rule, but it's what makes AI analysis usable. If you don't tell AI how to structure its response, it will freestyle. That makes comparisons difficult and insights harder to extract. When you define an output format, for example, bullet points followed by a bull case and bear case summary, you force consistency. This allows you to analyze different stocks using the same framework and actually compare them objectively. Structure turns AI from a chat tool into a repeatable system. When you combine these 5 rules, role, context, task, constraints, and output format, AI becomes a powerful long-term research assistant. To give you a quick example, compare these 2 prompts. First, is Tesla a good long-term stock? Now compare that with, act as a long-term equity analyst. I am analyzing Tesla as a company for a 3 to 5 year investment horizon. Analyze the company's business model and competitive risks. Ignore short-term price movements and speculation. Present the output in bullet points and conclude with a bull case and bear case summary. Same AI, completely different quality of thinking. Now, instead of building prompts like this from scratch every time, I decided to systemize the entire process. That's why I created a structured PDF called AI Prompts for Long-Term Stock Analysis. This is not a course. It's not a signal service. And it's definitely not a prediction tool. It's a practical research framework designed for long-term investors. Inside the PDF, you'll find the same 5-rule system explained clearly, along with 20 ready-to-use prompts that guide you step by step through stock analysis. Some of the prompts focus on understanding the business model in depth. Others analyze revenue growth quality, cash flow health, and balance sheet safety. There are advanced prompts that stress test competitive moats, construct bear cases, validate bull cases, and even define thesis and validation triggers. The final prompt helps you generate a full long-term investment memo, the kind of structured thinking professionals actually use. You can copy a prompt, paste it into your AI tool, and analyze any company with discipline and consistency. The PDF is priced at just $1, and it's available on Gumroad and Etsy. The link is in the description. If you're a long-term investor who wants to use AI as a thinking tool, not a prediction engine, this framework will save you time and reduce emotional decision-making. If this video helped you understand how to use AI properly for investing, the PDF takes it a step further. AI doesn't replace investors. It replaces bad processes.